Good afternoon. This is Andy Pedraza with Special Effects Academy on the weekly wrap-up session for the week ending April 20th of 2018. And on that note, I am going to get started. There will be a recording made available later today of this entire session in case you miss a part of it or the entire thing. So that will be emailed out later this afternoon. Our contents for our weekly review are going to be a look at the trades that were either entered or closed during the week, the account balance, any opportunities for improvement, and any open trades that will remain open throughout the weekend. Moving on to our first actual slide with data on it, the trades opened and closed for the week. So this is our roster. We had 13 trades that were closed. Of those, 8 were losers, 5 were winners. So we had a 38.46% ratio. At the end of the week, there was a slight loss of about $60. This is based on a $5,000 account. So we did end up slightly in the negative. The profit in actual pips was a negative 192.6. In weighted pips, we actually had a small pip profit, less than 100 pips, 86.6. And I'll explain what that means as we go through the actual ledger. Our growth was minus 1.20%. And on that note, let's take a look at what we actually did. So we had one trade that was held over from last week, that pound Canadian at the top. It did close out at a nice profit early in the week. So that was our first trade closed. And we had another couple of good trades with the euro dollar and the USD JPY, which also closed out at profit. So the week started out very nicely. We start running into trouble when we hit Tuesday. We had the USD Swiss trade, Euro JPY, Kiwi dollar, pound Canadian. All these went negative in those following 2 days. And some of that was a result of the market going into a little bit of a retracement after the large movements the prior week. We didn't time this one correctly. That is going to be unavoidable. You can never time these things perfectly in the market. You trade based on your signals, and you take the trades that your signals tell you to trade, to take, and you manage these trades so that even if you have a losing week, and there is no doubt that this was just based on the pip count a losing week, there are ways to make sure it isn't a deep loss, or even that you come out slightly ahead. As you can see, the net pip profit was negative, but the weighted pip profit was positive, and that explains why the loss in dollars was such a tiny one, as well as the growth percentage being less than 1.5% negative. So that's about that up through the middle of the week. We did have a fundamental announcement from the Canadian government coming out at the 18th. And these are the 3 trades you see here with the Canadian pairs: USD CAD, Euro CAD, and Pound CAD. On these trades, we did go in at full lot sizes, and that brings us to an explanation of what the weighted pips are. So we went in at full lot sizes, full-blown recovery mode, expecting a nice move. These trades, one of them closed out slightly negative. We took a 10 pip loss. On the USD CAD, this was a strategic decision. It wasn't moving as quickly as we had expected, and I pulled the plug on it early to avoid a reversal, especially when trading at that high lot size comparatively to the size of the account. So I closed that one out. I did remain in the Euro CAD and the Pound CAD as they moved into profit. I was happier keeping those open, and I adjusted my stop to a break even very quickly, so they could not go into the negative. I ended up taking 30 pips on one of them and 50 pips on the other, but since these were at 5 times the normal size, you might as well multiply these by 5. That's what the weighted pip value means. Since my normal trading lot size is 2 mini lots, when trading at a full lot, each pip carries 5 times the weight. So the loss of 10.2 pips was really a loss of 51, whereas the wins of 30 and 50 respectively were 150 and 250 pips on a weighted value. These did give us a nice little uptick of almost $600 profit between the three of them, which is why the account recovered so nicely and the loss was so minimal for the week. We had another trade that closed out with the euro dollar. We were expecting a retrace. It never happened. We took a small loss of about 40, a bit less than 40 pips. And that was the last trade closed for the week. And these are trades that are remaining open, and we will cover those. Actually, might as well cover them now. We are in the Aussie JPY. This trade is negative right now, but we will be keeping it open over the weekend. If it does close out, it will represent a loss of about 100 pips. Let me see what that, no, actually less than that. The loss there will be of about 60 or so pips, so nothing major. And we have the pound Canadian currently at profit, not a big profit, but nonetheless carrying profit that will also remain open. Moving on to the balance graph for the week, we did start, as I said, with a nice little uptick for the beginning of the week, where we entered, we got all above the 5,200 mark. And then we ended the week, as I said, slightly below the 5,000. So we had a little bit of a loss. You can see that the loss at one time was very deep, all the way down to 4,600. That would have been a 8% loss on the account at that point, but it was recovered nicely by the fundamental plays and trading at the full lot size for those. And then a slow dwindling to where we ended negative by about $60. So that's the performance. Even though it was a losing week, you can see that equity management carried the day. And all in all, there was no harm to the account based on following these self-imposed rules that I have, as well as keeping a cool head throughout the whole experience. When you're on the losing side of trades, that's the worst possible time for you to become emotional or second guessing yourself. That's when you need to pull out your plan and stick to it. The plan is going to keep you safe and gonna pull you through to the other side. That's about all I'll say for that. Of course, in our regular classes and courses and whatnot, we do dig heavily into the psychology of trading. And this week is a perfect example of why we do this. It's not how well you trade, it's how well you manage yourself that is gonna make the difference between profit or loss, or even staying alive just to fight for another week. So this week, as I said, not a huge uptick, but neither was it as deep a loss as it could have been had the right steps not been taken effectively. Opportunities for improvement, there really weren't any. So let me see what I'm trying to tell you guys here and put it in words that make a little bit of sense. Obviously, it was not a good week. You could say that, wow, this guy says he can't improve. But that's not the point. Not all weeks are going to be good. You're going to have weeks that are going to be flat out terrible. In fact, weeks that if you reach a certain loss point, you should just quit for the week and go do something else, come back the following week with a fresher take. So while I didn't identify anything I would have done differently for the week, we did have that fundamental announcement out of the United Kingdom, and this was the consumer price inflation year over year. It was a shock to the market. So the market went into a tailspin. The pound dropped precipitously. I was in a long trade at the time. I got taken out at a loss. And then it just continued dropping like a stone. I did not expect it to do that. While it has not pierced the bottom of the chart, It's definitely getting very close to that point. And in retrospect, I should probably have taken advantage of the sustained drop. I just did not, in my expectations, think that it could do that. I had figured that yes, it definitely dropped, and you can see the massive drop here when the announcement came out. But then it rapidly retraced, dropped again, retraced again. So it seemed to be doing a bit of consolidation, and then a second whammy hit it the following day, and it continued to go down. So in absolute retrospect, I probably could have figured a way to capitalize on this drop, and I didn't. But at the same time, I didn't lose any more money on this one. Basically left it alone, and I'm sure we will have opportunities to trade it back up in the week or the weeks to come. Again, my target for the pound, which I've mentioned several times, is about $1.50. However, that's between now and the end of the year. It could happen in the next 10 minutes, or it could happen around the last week of December. In fact, it could happen early January. These targets are not meant to be prophecies or predictions. They're just my fundamental view on the relative currency strength between one currency and another. In this case, I have a strong feeling that 150 is going to be the target. This week, we had the pound lose about 300 pips, give or take. So it's lost a third, a third of a cent. Actually, it lost 3 cents. I'm sorry. So it lost 3 cents against the dollar. So again, that is a pretty dramatic move. But in the grand scheme of things, people were getting $1.43 per pound. Now they're getting $1.40. To the common man on the street, that is not a big deal. To people trading in millions and billions, these are the companies out there. Of course, it is huge. It's a massive change. So this probably will not continue dropping. Again, my gut feeling, I reserve the right to be wrong, but I will be looking very strongly at opportunities to trade it back up to that 143 level and possibly beyond. So stay tuned for that. That will obviously not be this week, but we will at some point get to that. And of course, if it keeps dropping, I don't care if I am wrong, and I will admit to it being wrong. I will trade it down just as easily as I trade it up. Trading the Forex market is not a matter of sticking to your guns or trying to be always right. It's a matter of trading the trades that the market very kindly gives us, provides us with every single day that it is open. So that's going to be my my final note as regards the trading week, other than to say, and I mentioned these before, I am carrying a GBP Canadian long currently at profit and an Aussie JPY long currently at a loss. My Aussie JPY long is a very long-term trade. I'm expecting the Aussie to recover significantly after having a really bad start to the year. So I'll be happy to carry a little bit of a loss on that one. I've been in and out of that trade several times, selling on the highs, buying on the dips. I missed this high, so I could have gotten out of this one at profit, but I'm not terribly concerned. The Aussie JPY has already given us quite a number of pips this year, and it's a matter of continuing to harvest them when the opportunity comes. So I can afford to give up one, though this one is still open, so this one may not be given up at all. It may certainly come back to us next week or at some point. But we'll keep you posted on that one. For now, that is going to be the end of the weekly review, the wrap up for the week. So again, this is Andy Pedraza with Special Effects Academy. I really do appreciate you guys joining us and sticking to the program throughout the week. Our next session, of course, will be Sunday evening, 6 p.m. U.S. Eastern Daylight Time, when we do our pre-open scan of the market around the time that Asia starts trading. So on that note, I'll bid all of you a very happy and productive and fun weekend. Just enjoy yourselves. Markets closed. Nothing much else to be done. Just have fun, live your life. Talk to you on Sunday. Bye-bye.